And welcome back. Now, there is absolutely no doubt that the COVID-19 pandemic has brought the global economy to its knees, and inevitably many employers will need to contain costs by cutting salaries or enforcing retrenchments. And this may mean downgrading our own lifestyles and making sense of our financial health. Our next guest says that it's important not to panic and that it's vital to manage the situation responsibly. John Manyike is head of financial education at Old Mutual, and he joins me now via Skype. John, good morning. Thanks for speaking to us about a very important subject at a time like this.
Thank you, Sakina.
Now, at the end of May, John, many companies told employees that they will either cut salaries or they will enact retrenchments. Also, we look at the job market and it's close to non-existent in certain sectors at this given time during the lockdown. So clear, demonstrable economic turmoil playing out at the moment. But what would you say we should do? Because you're saying it's important that we don't panic. How do we not panic when all of this is going on?
That's true. I think we definitely need to guard our minds, during a period like this, but also we need to consider a number of things that have been put in place. Government has introduced the temporary employer relief scheme to cushion the blow on employees in instances where employers are struggling to stay afloat and are tempted to cut salaries. So in this particular case, if you are a contributor or if you are an employee as defined by the Unemployment Insurance Act, you can file a claim against your UIF directly with your employer. Your employer is obliged to advance you and then claim back against the UIF to offset that particular advance. That's the first thing. And secondly, you may need to engage with your credit providers. Firstly, establish if you do have credit life insurance, but understand the terms and conditions because they may differ from one credit provider to the next. In some instances, there are credit providers that do make provision for pay cuts to a degree where they can cover that particular shortfall. But again, there are certain things that we also need to do in terms of readjusting our budgets, perhaps even in the worst case scenario, downscaling either your house or your car. But you can also speak to your financial advisor to review your financial plan. If you've got car and household insurance and you are, say, working from home, you could also explore reviewing your risk profile with your insurance company, because it may mean that your premium may be reduced because of a reduced risk, because you probably travel from the house to do groceries in the shops. Those are some of the things. But then don't neglect as well engaging your family to manage expectation, to make them understand what you are going through at that particular point in time. Those are some of the things that I think people can do. But I think the other important one is to also explore alternative streams of income. It might not apply to everyone, but as far as you can, if you do have hobbies that you can monetize, do look at those alternatives to try and stay afloat during this period.
So let's just look a little more practically at some of the scenarios, John. So let's say someone has their salary cut or they receive a retrenchment package. What would you say is the most important expense to cut out?
Well, I think it all depends. There's no one size fits all. It depends on what your budget looks like. But you need to be able to discern between needs and wants. But there are things where, there are times where you have to take some drastic action. For example, it might mean in some instances having to move your children from private schools to a public school, in order to try and manage your costs. But it means you need to make some adjustment, even in terms of your mindset and the kind of lifestyle that you live before the pay cut. I think you need to take a view that you need to rebuild your income in order to bring it back to where it was or even better. But whichever way, some actions have to be taken, albeit uncomfortable.
So if someone has had their salary cut and they're sitting there thinking, how do I decide on which debt I need to pay and which ones I can't pay at the moment, how do they make that decision?
So I would say look at the loans with high interest rate, because that is your most expensive debt. So if you know that you've got 5 different loans, and then try and understand which ones are your most expensive debt in order to make that decision as to which ones. But you can also choose to go for the smaller ones. I mean, that will give you a bit of encouragement, if you're killing some of those smaller ones, and in some instances, if you ask for settlement figures from your credit providers, others may be prepared to give you some discount. So, but do make some negotiations with your credit providers.
So we also see, John, and we know this, that money issues can cause very nasty fights in relationships. And we've heard from some of the ministries already reporting an increase in gender-based violence during this lockdown. How does a person interact with family members over this new reality of household finances?
Yeah, I think it's a case of making your family understand that things have changed. You can no longer cover some of the things that you used to, because unless you manage your family expectations, you're going to have a problem where they expect life to continue being the same, whereas there's some adjustments that are needed. So I think the more proactive we are in engaging our family, especially for those who are taking care of their immediate family as well as the extended family. So, for example, in the case of retrenchment, you need to make your family understand that you are now unemployed. So even if there's a lump sum of some sort, it should not be seen as a money for a party or a money to experiment on many things that, because people will come up with ideas, others might see an opportunity to ask for a loan here and there because they've heard that you have a package, so you need to really manage those family expectations.
And then you said earlier, John, that one should try and approach your creditors. But the reality, and we see people writing to us about this all the time, is that creditors want their money. They tell you that they're also dealing with difficulties and they need to keep afloat as well. So what's the best way to go about negotiating with creditors at trying times like these?
I think if any reasonable credit provider, if you provide them with your budget, and as well as perhaps even proof of your retrenchment or a salary cut, and they are observing the fact that you are making an effort proactively so. But of course, the other, employers do take into account whether you were a customer in good standing before you experienced a salary cut or a retrenchment, because they tend to look more favorably to customers who have been loyal or have been in good standing. So that's also very critical. But if you've got a history of being a slow payer or non-payment from time to time, it does make it difficult, because then why should they believe that you are genuine, in your plea for some kind of concession? So, I mean, those things do come to play when decisions at that point have to be made.
Well, John, we're going to have to leave it there. Thank you so much for the advice. John Manyike is Head of Financial Education at Old Mutual, talking to us about how to plan your finances should you have to take a salary cut or receive a retrenchment package during the lockdown. And these are the somber realities that we are contending with at the moment. So we'll take a break at this stage and hopefully a bit of time to look at some of the tweets that you have sent us responding to our question of the day. But let's take the break first.